Hey, what's up everybody? So, quick Sunday prep video here. Just kind of been sleeping all afternoon, and I'm going to jump right back into bed as soon as I'm done with this here. But you got the market pulling back here towards the weekly 21 EMA, which, in my opinion, it's completely normal in any uptrend. It's just normal ebbs and flows of the market. You're going to build up energy at the 21, you're going to push into about 2 to 3 ATR, and at some point you're always coming back home to the 21. Now here's the thing, I think you want to kind of pump the brakes here on blindly buying the dip. Now I'm looking to buy the dip, but I ain't trying to rush into this. There's a lot of things that have to come together for the reversion to the mean to continue to be a buying opportunity. So be careful when you look at a chart here, and it's like, yeah, you pulled back to the 21, and if I bought a shitload of calls or if I sold a bunch of put credit spreads, you're kicking some butt a few weeks later. Now, if the trend continues here, it's probably going to be the case again. So you go buy a shitload of calls, trend continues, you're in good shape. But a few things do have to come together. So I'm still holding my long positions. And remember, I'm out in January. Anything I'm looking to add here, I'm going January, probably February, if not March. So I'm not playing around in this, 2 to 3 week window as I'm trying to add exposure here. But here's the thing. Market loses the 21 EMA, then I'm looking for the flush, then I'm looking for the next bounce, then I'm probably trying to short the market. So I don't ever operate with any biases. All I'm trying to do is play the trend in front of me, which, regardless of whatever is going on in the news, a pullback to your 21 EMA doesn't change the structure of any trend. So it all looks good on paper right now. And you still have stacked EMAs, you still have green 10X bars. And if you look at the S&P here, so as of right now, it's that textbook, push off the 21, pull back to the 21, find support, build a squeeze, continue the trend. Right? So on this bigger time frame here, this all looks really good. But there's a few things that has to come together. And again, this is why I think y'all want to be a little bit careful. And how can you be careful? You can sit on your hands and do nothing for now, until a few things come together or until we just blow through the weekly 21, then you probably try to short the next bounce. So you can sit back and do nothing for now, or scale down in position size. And for conversation's sake, if you're trying to get long for January, February, March. Right? There's this misconception that, if you go out to March expiration with a put credit spread, that you're left holding it until March. Well, if you go sell a put credit spread on Tesla for March expiration tomorrow, and then in 3-4 weeks Tesla's up there at 1,300, you're bringing home your paycheck. So, sit on your hands, do nothing, or scale down a position size, give any swing trades to the upside plenty of time. But you're looking for a few things that come together here. So the first piece of the puzzle is I have never been served well getting crazy aggressive to the upside as volatility is spiking. Now you're kind of trying to dance on a fine line here. I don't want to quite wait until VIX is back at 18 until I get more exposure to the upside. At that point, everything's probably extended. But I'm also not trying to be the first guy to get long as VIX is pushing through, 35. So what I'm looking for is for volatility to start to die down. And you kind of get that blow off top there into Friday's close. Possibly sets us up for a decent bounce here early this week. I don't think that really changes some of the issues here, so to say. But I need volatility to die down. Kind of plain and simple. You got ebbs and flows of the market, you got ebbs and flows of volatility. As the market is pulling back to your 21 EMA, you're going to get the spike in the VIX. You're not going to find support there and bounce back to highs until VIX dies down. VIX keeps pumping, market keeps on dumping. Remember that. So it's one thing to pull back to a moving average. What has to take place in volatility, and then what has to take place in momentum for us to get the move back towards the upside? So we need volatility to die down here, but the other component is going to be the shift of momentum. So maybe this is just your pullback to the weekly 21, right? Just like this was over here. But you're not going to get that curl back towards the upside until momentum shifts back in the bull's favor. So to go from plus 2 or 3 ATR in a weekly chart to the weekly 21 EMA. As your weekly chart is making just a normal pullback, your daily, your 4 hour, 2 hour, 1 hour, but pretty much every other time frame is breaking down, is losing structure and losing momentum. So it's bearish momentum and a loss of structure on all of your lower time frames that gives you the pullback to the 21. To get any move back towards the upside, you need momentum to shift back towards, the bullish side of things. So if we take a look at this here, right? Here's the 10x bars on a monthly chart all the way down to the 5-minute. So, yeah, your weekly chart looks pretty. You've pulled back the support here. But with, VIX ripping and red 10x bars on your daily, your 4 hour, your 2 hour, your 30-minute, we haven't quite gotten that shift of momentum just yet. So it's a pullback to support, but no supporting shift of momentum. Check out the cues here. All right, if you look at the cues from that perspective, it's a great looking weekly chart. It's in the squeeze. You even have green 10x bars here. So everything about the weekly chart just looks better because it's pulling back to the buy zone. But your daily, your 4 hour, your 2 hour, your hourly, your 30-minute time frames, bearish momentum. So this is what I'm looking for here. And I'm not really trying to put cash to work to the upside until this happens. So, if you're bearish right now, and remember, it's not, oh, I'm bearish, you're bullish. It's not so much about that. It's more so, hey, what is the market trying to give me here? What's going to be the easy trade? That's all we should really care about. So, if you're trying to short this market, take everything we just said here, and you're kind of looking for the opposite, right? You're looking for VIX to progressively continue to rally higher. You're looking for momentum to continue to lean bearish, right? You want to see the 3-day chart have red 10x bars. Then the weekly chart have red 10x bars. But that's what I'm focusing on as far as, hey, if I'm trying to buy the dip, because every other time we pull back to the weekly 21, it's a pretty good idea, right? I think a good idea, once again, if and when volatility throws in the towel, and if and when you get your shift of momentum. So there's a little bit more than just waiting for your pullback to the moving average. Few things got to shift there under the surface. So, typically I think we jump into the Teslas, the Amazons, all the stock side of things. Doesn't too much matter right now. Amazon still has a good looking weekly squeeze. I still think Tesla looks good. Like this, the semiconductors, Nvidia, AMD, they all look good here. But here's the way you got to look at it. QQQ comes in a little bit more. We find support at the 21. Maybe we spend a couple of weeks chopping here, right? But come in a little bit more. We find support. Volatility dies down. We get a shift of momentum. So now your 5-minute up to your daily time frames have green 10x bars. This trend continues higher. If that's going to be the outcome here for the S&P and the QQQ, then guess what? Most likely Tesla, Nvidia, AMD, Apple, Google, Microsoft. As goes the market, goes the stocks. So if you're trying to pick up some Amazon here on this flush, which I like, your major focus here should be this chart, right? It's the S&P, the QQQ, and the VIX. We pull back to the 21. We don't find support. We bounce and then continue to roll over. Down goes Amazon. Down goes Tesla, AMD, Nvidia, Google, Apple, etc., etc. So at this point, patience, I think, is required. To jump in, hand over fist and get long here, you don't, at least I don't think, you got enough going here as far as momentum. To short into weekly support, as VIX is kind of through the roof, I don't think that's the best idea either. And if you look at the put-call ratio here, so here's what this means, right? Put-call ratio at 0.97 pretty much means everybody and their mama has got some puts right now. So fear is kind of, at the extremes, right? Fear's at the extremes. typically means potentially the market's going to put in at least a short-term bottom and give you a bounce. These kinds of things aren't, promises or guarantees, but certainly something to keep an eye on. But that is what I got for you this weekend, my friends. I'm trying to be patient, and before I got to put some cash to work to the upside, here's what I got to see take place. Otherwise, let me see the market flush under the weekly 21. Then if the first bounce after that is rejected, then I'm looking to short it. So I'm willing to take whatever the market has to offer. As of right now, holding tight, being patient, and as long as the weekly structure holds, that's what gets most of my respect here. But that's what I got for y'all. As goes the market goes, probably Tesla, Amazon, Google. So I think you narrowed down your focus this week to just your two major indexes, just your volatility index, and let the dust settle before you go putting, I think, a lot of time and effort into the individual stock. Now my game plan is, as long as we hold above the weekly 21, if I'm running a scan or I'm building my watch list, I am going to continue to look for bullish opportunities. So weekly trends hold structure. Can I get some Tesla? Can I get some Amazon? Because if the market turns back towards the upside, something like the semiconductors is one of the first spots I want to get long. It's held up really well here compared to pretty much everything else. But if the market breaks the mean, VIX keeps on rocketing higher, probably down goes the semiconductors. So patience, I think, is going to be the move here early this week. Futures open up in about 20 minutes, so we'll see how those are looking. I do think potentially, just because of the crazy spike in VIX on Friday and the way it kind of dumped, could get a little bounce here early this week. Don't focus so much on the bounce, focus on momentum. And one last thing here is just kind of take note of just how long it can take for us to get a move going off of the weekly 21. Right? You flush under it, you bounce. You flush under it, you bounce. You flush, bounce, flush, bounce. You spent a month here kind of screwing around. And I think we have the Fed meeting on December 15th. So potentially, we'll talk more about this tomorrow morning in the pre-market prep. Potentially we just kind of trade sideways here in this weekly squeeze. Up until the Fed meeting. But we'll cross that bridge when we get to it. Enjoy the rest of your night. I'm going to get back into sleep mode here. That way I feel a little bit better and a bit more energized for our pre-market prep session tomorrow morning. But I hope you had a good weekend. Talk to you soon, everybody.